The housing industry's top forecaster says U.S. home prices may keep declining for some time. Yale University professor Robert Shiller wrote in the New York Times this weekend that housing prices may keep dropping in 2010 and 2011, partly because home buyers don't behave like other investors. Schiller is one of the creators of the S&P Case-Shiller Home Price Index and notes that when the last housing boom ended in 1991, U.S. home prices didn't start rising until 6 years later. The index of home prices in 20 major U.S. cities shows prices have fallen 32% from their peak in July 2006. Deirdre?
Eric, some say the U.S. economy is beginning to show signs of recovery, but the inflation threat is looming. To what extent do we have to be worried about going back to the 70s, talking about stagflation? Monica Bertrand joins us now to explain. So, Monica, don't tell me that we have to buy shag rugs.
Well, I don't know about that, Deirdre, but people are worried about the inflation picture at the moment, triggered by rising commodity costs, especially energy. The S&P Total Return Index, which tracks metals, energy, and agricultural commodities, actually jumped 20% last month, primarily because of rising oil and gasoline prices. Now, that's the biggest monthly percentage gain since September of 1990. Now, AAA does say that gasoline was up to an average of $2.59 a gallon last week from $2.05 a gallon May 1st. Economists say a 50-cent a gallon markup takes away about $70 billion of consumer spending power. Now, Federal Reserve Chairman Ben Bernanke told lawmakers last week the central bank is staying vigilant on inflation.
For the time being, we still need to maintain a strong, supportive position in order to help this economy begin its recovery. But as that begins, at some point, we're going to need to begin to withdraw the policy accommodations so that we can avoid any inflation down the road.
And, you know, it's not just oil and gasoline on the rise. Copper prices are also jumping. Copper's up about 59% this year as of Friday, although the price is still well under last year's all-time high of about $4 a pound. Now, of course, Eric, the big question is whether a jump in inflation would overwhelm the recovery before it takes a stronger hold on consumers. That, in turn, can trigger a return of stagflation, a scenario of rising prices and falling demand.
And a scary scenario it is.